On May 12, 2025, the president came out and announced that there would be a 90-day pause in the trade war between the US and China. Now, once this news hit the airwaves, it caused the market to skyrocket, and the Dow Jones finished up over 1,100 points on the day. Now, just to quickly go over just the high-level details of the 90-day pause, then we know that the United States agreed to reduce its tariffs from 145% down to 30%. Now, that does still include the 20% fentanyl tariff, and China agreed to reduce their tariffs from 125 down to 10%. So in today's video, I wanted to go over 8 stocks that I'm going to be watching and adding to my portfolio over the next 90 days until we see if there's more progress made on this trade agreement and something becomes more permanent in the market. All right, so the very first position that I'm going to be watching is Google. Over the past week or so, we have seen Google make a move to the downside, with Apple releasing news that they're going to be investing more in their AI capabilities, which in turn could help them to potentially replace Google as their dominant search engine on Apple devices. Not 100% sure if that's actually going to be the case or not, but I think that announcement impacted Google as a whole. And on top of that, Google continues to be challenged around the globe for their dominance in the search engine space. But I'm still confident in Google being the world's dominant search engine. And then of course, they dominate with YouTube as well. All right, so if we take a look at Google's 52-week high, we see that they were trading at 208.46. So there's absolutely some opportunity for this company and this stock to move back to the upside. So since I'm still a long-term believer in Google, I want to make sure that I'm investing in this company, especially over the next 90 days, where we could see this move back up to the upside, maybe not back up to the 208.46, but higher than the 159 that we see right now. All right, and the next stock that I'm going to be watching over the next 90 days is Tesla. So Tesla saw some movement to the upside after the announcement, and we see that they're at 318.38. All right, and if we take a look at their 52-week high, we see that they were trading at 488.54. So there's over a $100 delta between where we are today on Tesla and where they were at their 52-week high. Now, of course, I know that there's a lot of bad press, a lot of bad stuff going on with Elon Musk, and there's a lot of people that are boycotting the brand. I'm still a long-term believer in Tesla. So Tesla is absolutely going to be a company that I'm going to be watching over the next 90 days. All right, so the next position that I'm going to be making sure that I keep my eye on over the next 90 days is Vanguard's VOO. So we closed out in the after hours today around 535.92. And if we take a look at the 52-week high on VOO, then we know that it was trading at 561.97. So again, we have over $100 delta between the 52-week high and where we are today. And since VOO represents the S&P 500, one of the biggest factors that contributed to the move to the downside was the implementation of the tariffs. So now that we have a 90-day pause, I do think there's some opportunity for the S&P 500 to make a big move back to the upside. But keep in mind that after the 90-day pause on this tariffs, if no deal is put into place, and we ultimately get back to that 145% tariffs that the US is putting on China and the 125% that they're putting on the US, we could see some more movement back to the downside. But VOO is absolutely something that I'm going to be continuing to invest in, and it's a staple in all of my investment portfolios that I invest in. All right, so the next company that I'm going to be investing in is going to be NVIDIA. So as of right now, NVIDIA is trading right around $123. So if we take a look at their 52-week high, then we know that they're trading at $153.12. So we have about a $22 difference between where we're trading now and where NVIDIA was at its 52-week high. And NVIDIA is going to be one of the biggest beneficiaries of this pause in the trade war. And we know that the tariffs that were put into place had a hugely negative impact across the entire technology sector. So NVIDIA has a chance to bounce back over this next 90 days. And the next stock that I'm going to be keeping an eye on over the next 90 days is Microsoft. And next to VOO, Microsoft is the second most important position within my portfolio. And as you can see, we were trading at $449.26. And we had a 52-week high of $465.64. So Microsoft already moved back to the upside after their positive earnings announcements a couple of weeks ago. And I think that this particular company has an opportunity to hit that $500 mark. And the next company that I'm going to be keeping an eye on is Him and Her Health. So as of closing today, we closed at $55.21, and we saw a 52-week high of $72.98 in HIMS. And when I take a look at this particular holding, this is not a position that is going to be a staple within my portfolio. This won't be a day trade or anything like that. This will be more of a swing trade for me. I'd like to be able to hold on to HIMS to see if we can get up to that $80 to $85 price range, and that's whenever I would jump out of this position. I think it's a solid company that has a tremendous amount of upside potential, but it's not something that I want to be holding for the next 5 to 10 years. So if this is not a company that you've researched in the past, I would suggest that you jump online, look them up, and just take a look at their product lines and take a look at their sales over the past year or so. And I think you'll be impressed. But again, this is going to be more of a swing, short-term hold for me. And I want to see if we can get back to that 72-week high, maybe a little bit more, and then I'll likely liquidate my position in HIMS. All right, so the very next company that I'm going to be making sure that I'm keeping an eye on and investing in is Eli Lilly. So if we take a look, Eli Lilly was trading at $755.57 during after hours today. And if we take a look at their 52-week high, we see that they were trading at $969.25. So there's a huge delta between where we're trading at today with Lilly and where they were at their 52-week high. Now, Eli Lilly did actually pull back to around that 698 area, and I wasn't able to get in at that price. I did grab a few shares prior to it actually taking back off a little bit today, but I didn't get in around that 698 zone. But I still think that I got a good fill. Now, this is one where my expectation is Eli Lilly will ultimately get back to their 52-week high and surpass that and ultimately be over $1,000 per share. I know that there were some people talking about Eli Lilly potentially splitting in the future. I haven't really looked into that, or I haven't really seen much traction on that, but I think they could be a good candidate for a stock split in the near future. And the very next position that I'm going to be making sure that I keep an eye on is Vanguard's VGT. So if we take a look here, then we see that VGT is trading at $598.19, and they had a 52-week high of $647.94. So again, we have a position here that pulled back whenever the tariffs were put into place, but now there's an opportunity for us to potentially run back up near that 52-week high. Now, this is an aggressive growth, technology-based index fund. And like I had previously mentioned, the tariffs battered the technology sector. So I think that now that there's that 90-day pause, we do have an opportunity for the technology sector to make a big move back to the upside. All right, so those are 8 positions that I'm going to be watching and heavily investing in over the next 90 days. Even though we saw a lot of movement in the stock market today, I still think that there's an opportunity for us to continue to buy in before the market takes back off. Even though I'm keeping a very close eye on all these positions and continuing to invest in them, I'm very mindful that this administration can be extremely unpredictable and sometimes very volatile. So I know that at any point in time, this administration could come out and say that 145% tariffs are reinstated, and that would, of course, impact the market in a negative way. So I'm going to be making sure that I'm going to be paying attention to everything that comes out of this administration with regards to their progress on trade talks. And if it seems like things are getting a little bit more heated, a little bit more contested, I'll likely pull back the amount of money that I'm investing into my accounts. And if they come out and they have a little bit more upbeat, positive tone to them, then I'll know that we're potentially going to be heading back up to the upside. And the biggest thing that will spike this market is when the administration comes out and not only says that they have a trade deal in place, but it's permanent. They've signed the deal, which I believe will continue to spike the market to the upside. All right, so what do you guys think about the companies that I'm going to be watching and investing in over the next 90 days? What companies would you add? What companies would you remove? Let me know down in the comments below. And as always, thanks for watching, and I'll catch you on the next video.